By ordering a DuoTax depreciation schedule and claiming depreciation on the 10-year-old house she purchased for $646,000, Sarah saved $2,331 in her first year of owning the property. Here's how. Hey everyone, Kim Clutch from DuoTax, here for another video designed to help you become a better property investor. The date, age, and type of property all have an impact on what you can or cannot claim on depreciation. So in today's video, I wanted to share with you an example of a second-hand house that was purchased by one of our clients for $646,000. For interest's sakes, I wanted to compare what it would look like if she hadn't ordered a depreciation schedule, and then what difference it made claiming how much tax she saved. But before we get started, we want to be clear that this video is for informational purposes. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. Okay, so let's have a look at some of the figures. Sarah purchased a 10-year-old house for $646,000 in June 2020 and rented it out immediately. She was able to charge a weekly rent of $470, which means she was generating $24,440 of rental income per year. Now, to cover her interest repayments, management fees, council rates, and maintenance costs, she was spending $35,409 each year. Currently, her marginal income tax rate is 37%. Now, because the property is older, the fitted plant and equipment assets are considered second-hand, so she can't claim deductions for the depreciation on the property's existing plant and equipment or Division 40 assets. She can, however, claim depreciation on the property's capital works or Division 43. Now that we have all the figures in order, let's have a look at Sarah's cost breakdown with and without depreciation in her first year of owning the property. Without depreciation, Sarah would be running at a loss of $10,969 each year. Because of that loss, she would be able to claim a tax refund of $4,059, bringing the annual costs of her investment property down to $6,910. So, she would have to pay over $100 out of her own pocket each week to maintain her investment property. According to the depreciation schedule we put together for her, she could claim $6,300 depreciation in her first year. If we add the depreciation to her net loss, she would be running at an even greater loss of $17,269. But that's not necessarily a bad thing, because the bigger the loss, the bigger the tax refund. So, thanks to her depreciation deductions, Sarah received a tax refund of $6,390. In the end, her investment property's annual cost totaled $4,579, which is significantly lower than what she would have paid without her depreciation claim. By taking advantage of the ATO's tax breaks and making a depreciation claim, Sarah reduced that weekly payment by $45 per week. That means that we were able to save Sarah a total of $2,331 in her first year of owning the investment property. Another great thing about her depreciation schedule is that it's valid for up to 40 years. So she can continue saving money each year as long as she continues to own the property. As you can see from Sarah's scenario, tax depreciation schedules can make a massive difference in an investor's cash flow each year. If you're someone who's bought a second-hand property and you're not sure whether it's worth getting a depreciation schedule, you can find out yourself using our depreciation calculator. This is an accounting tool designed to help estimate and calculate the declining value of capital works and plant and equipment assets, and relies on accurate figures to present accurate estimations. We've left the link in the description box below, so make sure you check it out. It's completely free. Or you can get in touch with one of our DuoTax team members and we can provide you with a free estimate on the phone. Otherwise, if you're ready to get the ball rolling, you can order your DuoTax depreciation schedule over the phone or via our online form. And we'll get that report to you within 5 to 10 business days. So there you have it, guys. Make sure to check out our YouTube channel to subscribe for more client case studies and see how claiming depreciation can boost your cash flow. I'm Kim Quach from GeoTax. See you next time.